Good evening. Tonight, we're pulling back the curtain on a company that shapes your life, your savings, and your future. BlackRock. While it rarely makes headlines like Apple or Amazon, BlackRock's influence is far more pervasive. We'll explore how this financial giant became the world's largest investor, managing trillions of dollars for millions of people, institutions, and even governments. We'll examine its role in global crises, its technological edge, and the controversies surrounding its power. BlackRock's reach extends into companies you interact with daily, from your morning coffee to the tech you use right now. We'll present both sides, its role in helping people save for retirement, and the criticisms about its immense influence. Does one company have too much power? What happens when it owns stakes in competing firms or advises governments? We'll lay out the facts, so you can decide for yourself. Let's get started. So, what exactly is BlackRock and why does it matter so much in the world of finance? Simply put, BlackRock is the world's largest asset manager, overseeing trillions of dollars for clients across the globe. BlackRock manages money for millions of ordinary people, whether through their tireless retirement savings, pension funds, insurance policies, or university endowments. Even governments trust BlackRock with their investments. Founded in 1988 by Larry Fink and a small group of partners, BlackRock began as a modest startup focused on risk management, aiming to help clients avoid costly mistakes. Its breakthrough came with exchange-traded funds, or ETFs, especially its iShares brand, which revolutionized investing by making it more accessible, affordable, and transparent for everyone, from beginners to professionals. Today, BlackRock offers a vast range of financial products, from actively managed funds to passive index trackers, catering to every type of investor and financial goal. Its business model is simple: charge a small fee on the assets it manages, but when you're managing trillions, even tiny fees add up to billions of dollars in revenue each year. But BlackRock is more than just a money manager. It's a trusted advisor to governments and corporations, especially during times of financial crisis or uncertainty. It's not a bank, nor a government agency, but it sits at the table with both, shaping decisions that affect economies and markets worldwide. This unique position blurs the line between private enterprise and public influence, giving BlackRock a role that few other companies can claim. BlackRock's advisory role means it has a voice in major economic decisions, helping to guide the direction of global finance and policy. Its influence is unmatched in the financial industry, shaping markets and trends on a global scale. Understanding BlackRock means understanding a new kind of power, one that operates behind the scenes, yet impacts millions of lives. Let's take a closer look at the staggering numbers behind BlackRock's global power and influence. BlackRock manages around $10 trillion in assets, a staggering sum that makes it the world's largest asset manager by far. That's more than the GDP of every country except the US and China, putting BlackRock's financial reach on a global scale that rivals entire nations. It's a top shareholder in thousands of companies across nearly every industry you can imagine, from tech to energy, finance to retail. Apple, Microsoft, Amazon, Google, major banks, energy giants, and consumer brands you see every day are all part of BlackRock's vast portfolio. If you use a smartphone, drive a car, or buy groceries, you're likely connected to a company BlackRock invests in, often without even realizing it. Its revenue comes from small fees on these massive assets, generating over $20 billion annually, money that flows in steadily, regardless of market ups and downs. CEO Larry Fink's annual letter to CEOs is required reading in boardrooms worldwide, shaping agendas on everything from governance to climate change and influencing how companies set their priorities. But this concentration of ownership raises concerns about accountability, transparency, and the potential for conflicts of interest. BlackRock is often a top shareholder in competing companies, like Delta and United Airlines, potentially reducing competition and impacting consumer choice. Critics warn this could mean higher prices for consumers, less innovation, and fewer options in the marketplace. BlackRock insists its shares are held in separate funds, but its voting power is immense, giving it a major say in how companies are run. Its influence over corporate America is unprecedented, shaping the direction of the nation's biggest businesses. Next, let's see how technology amplifies that power, taking BlackRock's reach to an entirely new level. BlackRock's secret weapon isn't just money, it's technology. At its core is Aladdin, a risk management platform that tracks trillions in investments in real time. Aladdin runs stress tests, simulates crises, and gives BlackRock's managers a forward-looking view of global risks. But Aladdin isn't just for BlackRock, it's licensed to competitors, banks, and pension funds, overseeing over $20 trillion in assets worldwide. This gives BlackRock a unique bird's-eye view of the global financial system. But with so many institutions relying on Aladdin, a single error could ripple across markets. Regulators worry this concentration could create new systemic risks. The tool designed to prevent crises could, ironically, help cause one. BlackRock's reach is global, 70 offices in 30 countries, clients in over 100 nations. Its investments span continents, from Silicon Valley to emerging markets in Asia, Africa, and Latin America. BlackRock is a top shareholder in Canada's biggest banks, the UK's FTSE 100, Germany's Siemens and Volkswagen, and Japan's Nikkei index. Its quiet accumulation of shares makes it a fixture in boardrooms worldwide. This global presence gives BlackRock a powerful voice in economic policy. Its executives regularly advise finance ministers, central bankers, and heads of state. BlackRock plays a key role in international forums like the World Economic Forum. But this influence sparks criticism, especially when it invests in sensitive sectors like energy or defense. In France, BlackRock's role in pension reform has sparked protests. In Mexico, its infrastructure investments face scrutiny. As its footprint grows, so does the backlash. Navigating global politics is now part of BlackRock's business. BlackRock's power is most visible in times of crisis. During the 2008 financial meltdown, the US government hired BlackRock to manage toxic assets and oversee bailouts. Its expertise in Aladdin platform made it the go-to crisis manager. In 2020, as COVID-19 rocked markets, the Federal Reserve again turned to BlackRock to manage massive bond buying programs, including some of its own ETFs. Supporters say BlackRock's unique skills help stabilize markets and prevent deeper crises. But critics see conflicts of interest. BlackRock profits from programs it helps run. When the Fed bought corporate bond ETFs, BlackRock directly benefited. This blurs the line between public service and private gain. The question, should one private company have this much sway in public crises? BlackRock's immense power attracts both praise and fierce criticism, making it one of the most talked-about companies in the world of finance. Its low-cost ETFs have democratized investing, opening doors for millions of everyday people to save for retirement and build wealth, regardless of their background or experience. Supporters argue that BlackRock pushes for better corporate governance and sustainability, using its influence to encourage companies to act more responsibly and think long-term. But critics warn of a dangerous concentration of power, one firm with stakes across entire industries, potentially shaping markets and decisions behind the scenes. Some accuse BlackRock of not doing enough to fight climate change, while others attack its embrace of ESG principles as political overreach, arguing it meddles in issues beyond finance. Several U.S. states have pulled pension funds, accusing BlackRock of prioritizing social and environmental goals over maximizing financial returns for retirees and taxpayers. The company walks a tightrope between finance and politics, facing backlash from all sides as it tries to balance profit, public pressure, and policy demands. BlackRock is more than just a financial firm. It's a new kind of power center, sitting at the crossroads of capital, technology, and government, influencing decisions that affect millions. Its rise has democratized investing for some, but also concentrated enormous influence in the hands of a few, raising questions about fairness and accountability. The story of BlackRock is the story of modern capitalism, its promise, its peril, and the urgent question: how much power is too much for one company to hold in our society?